Understand what the street is expecting from two nifty majors, that is SAIL and DLF, which are slated to declare their first quarter earnings today. Gargi as well as Darshan are waiting by for the ET Now poll. Gargi, you go first. What's the expectation from SAIL?
Well, Aisha, on the net profit level, we are expecting an uptick of almost 20%. 1,000 crores is the number pegged for that. For net sales, we are expecting that at about 11,700 crores. That's an uptick of almost 8% from last year levels. Operating margins, remember, for SAIL will show a slight uptick, almost 150 to 200 basis points. 13% is the expectation. The revenue uptick that we spoke about really coming in from better realizations of steel. The volumes, however, remaining constant at almost 2.7 million tons. The realizations this time around close to 42,000 rupees per ton versus about 40,500 that we had seen last year. Steel prices have shown a bit of an uptick. The operating performance, and this is unusual because most steel companies are reporting low operating margins if you compare with last year. But for SAIL, the story being 100% of their iron ore really comes in from captive sources. So on that front, they are clearly hedged. But on the coal side, they have, coking coal, which almost 80% of it will be imported. That probably will hit the margins a bit, but that's more than offset from the higher realizations that we are seeing. The bottom line, in fact, this time around, we are expecting some forex loss to hit, and overall, it will be a decent quarter for SAIL.
Okay, let's talk about the other Nifty 50 company to report earnings later today, and that's real estate major DLF. Darshan, what is the street expecting? Profits likely to shrink, but margins could improve?
See, over the past few quarters, DLF has disappointed, and this quarter could actually be the same, because we're expecting revenues to be pretty much the same. They haven't launched any major projects, hardly any projects that were launched. In terms of, we are expecting 2 million square feet of sales for DLF, and they have given a guidance of 12 million square feet. So clearly, it will be on the revenue front, it will be a disappointing quarter. Apart from that, margins are expected to shrink by almost 400 basis points for DLF. See, remember, you cannot compare DLF to margins to last time or last quarter, because they had taken a one-time expense in terms of their cost of materials and labor and outsourcing cost for construction was concerned. But on a year-on-year basis, it will be pretty bad because they haven't actually gone ahead and sold any non-core assets, which the street is pegging. The debt won't come down. Debt will be in the levels of 23,000 crores. So clearly, rather than the numbers over the past few quarters, what we've noticed is that people actually pay attention to what the guidance is, what is the sales number in terms of their residential units that they do. So 2 million versus 12 million guided, and debt 23,000 crores. So interest cost is something that will heavily impact the profits of DLF. So clearly, the debt number, what they have sold as far as their non-core assets, and the amount of square feet sold will be the most important part to watch out for DLF.
Okay, Gargi as well as Darshan, thank both of you for taking the time out and joining us to walk us through what the earnings expectations are. SAIL and DLF both holding up extremely strong ahead of their first quarter earnings. Shifting focus then.